All right, let's get into it. Today, we are stepping away from the wild world of digital tickers and crypto markets that seem to go up and down like a yo-yo. We're going to get our hands dirty, building real-world wealth. You know, the kind you can actually see and touch, the kind that provides steady cash flow. We're going to break down 3 tangible strategies you can start right now. And this quote really nails the vibe right now. After years of everyone chasing digital gold, there's this huge shift happening. People are looking for something solid, something dependable. They want assets that don't just disappear because of some online hype. They're going back to basics, because the basics, well, they're built to last. And that's exactly where this idea of tangible yield comes in. It is what it sounds like, cash flow from physical stuff. We're not talking about stocks or digital tokens here. We're talking about real machines, actual legal contracts, and equipment that generates cold, hard cash. It's basically the antidote to all that digital uncertainty. So how do we actually get this tangible yield? Well, our first strategy might sound a little boring. But trust me, in the world of cash flow, boring is beautiful. We're talking about those automated service kiosks, the quiet little workhorses of the real-world economy. The process here is just wonderfully simple. First up, you get a specialized machine. And think beyond just snacks and sodas. We're talking cool stuff like gourmet coffee kiosks in office buildings or even automated car wash stations. Second, you've got to lock down a spot with a lot of foot traffic. And third, you just service the machine and collect the cash. It's a simple, repeatable formula. So what's it going to cost you to get in the game? Well, you're looking at somewhere between $5,000 and $15,000 for one of these specialized kiosks. That investment buys you a tiny, automated business that works around the clock. And let's be real about the workload here. It's what the source calls active-passive. So yeah, you have to do some active work, like restocking and maintenance. But the machine itself, that's the passive part. It's working for you 24/7, making money even while you're sleeping. All right, our second strategy lets you tap into the massive real estate market, but, and this is the best part, without needing a huge down payment. It's a clever little thing called rental arbitrage. So here's the playbook. First, you sign a long-term lease on a property. And this part is absolutely critical. You need the landlord's written permission to sublet it. Second, you furnish the place for short-term renters. Think traveling nurses or executives. Finally, you list it online and manage the bookings, pocketing the difference. Of course, you're also managing the risk of having it sit empty between tenants. But the payoff? It can be pretty sweet. In the example from our source material, the property brings in about $3,000 a month. After you pay the $2,000 rent and cover cleaning fees, you're left with a net profit of $800 a month. That is pure cash flow from a property you don't even own. So what do you actually own here? It's not the building. You own 2 key things: the legal contract that gives you the right to use that space and all the furniture you put inside it. Those are your tangible income-producing assets in this game. Okay, on to our third and final strategy. This one takes the whole idea of the sharing economy and applies it to something other than cars and houses. This is all about owning and leasing out the specialized gear that people need, but really don't want to buy. Here's how it works. You buy a piece of equipment that's in high demand but is kind of expensive for someone to buy for a one-off job. Things like an industrial pressure washer or maybe professional camera gear. Then you just list it on rental apps, connecting with people who need it for a project. The real key here is to pick something that people need year-round so you don't hit a slow season. And just look at how powerful this model is. A pro-grade pressure washer might cost you about $1,000, but if you rent it out for, say, $75 a day, you could pay off the entire thing in less than 15 rental days. Think about that. Everything you make after that is pure profit. The value exchange here is just crystal clear. You've got the expensive, high-quality tool that they only need for a weekend. In return, they happily pay you for the convenience of not having to buy it. Simple. You own the asset, they just rent access to it. So let's do a super quick recap on the cash flow. With kiosks, it's a straight-up cash-in, cash-out model. Super simple. With rental arbitrage, you're using a legal contract to generate a really consistent profit stream. We're talking $800 a month, maybe more. And with equipment leasing, the speed to get into pure profit mode is just incredible. You could have your asset completely paid for in less than 2 weeks. It's amazing. Now, before you get all excited and run out to buy a kiosk, there is one absolutely critical rule you have to follow for any of these businesses. This is the secret to making them last. Just remember this number, 10%. This might be the single most important number for keeping your physical assets healthy and making you money for the long haul. Look, physical things break, they wear down. It's just a fact of life. That's why you can never, ever spend 100% of the money your asset generates. The rule is simple. Always take 10% of the income and stick it into a separate repair fund. That's the habit that keeps your little money machine running for years, not just for a few months. And at the end of the day, all these strategies circle back to this one powerful idea. Digital wealth is fine, but it's abstract. There's just a special kind of security, a real peace of mind, that comes from owning something in the real world, something you can literally put a padlock on, knowing it's there, working for you. Which brings us to the end of our analysis today. We've looked at 3 really distinct, really powerful ways to generate tangible yield. So now, let's make this about you. So we'll leave you with this $10,000 question. If you had the cash to start one of these, which path would you take? The steady, predictable cash flow of a kiosk? The real estate leverage you get from rental arbitrage? Or the super fast returns of equipment leasing? Let us know what you think. Thanks for joining us for this explainer.